So what is Forex? Forex is an acronym for the foreign exchange market. The Forex market is the largest financial market in the world, larger than the stock market, with a daily volume of $6.6 trillion. The Forex market is open 24 hours a day in different parts of the world, from 5 p.m. Eastern on Sunday until 4 p.m. Eastern on Friday. The ability to trade over a 24-hour period is due in part to different international time zones. The Forex market can be broken up into 4 major trading sessions: the Sydney session, the Tokyo session, the London session, and the New York session. Out of those 4, historically, the Forex market has 3 peak trading sessions: the Asian session, which is also known as Tokyo, the European session, which is also known as London, and the New York session, which is also known as the US session. Around-the-clock trading allows investors from across the globe to trade during normal business hours, after work, or even in the middle of the night. However, not all times of the day are created equal. Although the market is open, there are times when price action is consistently volatile and periods when it is muted. More volatility means more price action. If you trade wisely during these higher volatile hours, you can make a substantial amount of money. So let's dig deeper. The Asian session, which is also known as Tokyo, is open between the hours of 11 p.m. to 8 a.m. GMT. The European session, also known as London, is open between the hours of 7 a.m. to 4 p.m. GMT. And the North American session, also known as New York, is open between the hours of noon to 8 p.m. Let's take a look at this diagram. Notice that there are times when the Asian session and the European session overlap. And there are also times when the European session and the North American session overlap. These are the most volatile hours and when liquidity is most present in the market. So again, guys, these are your key takeaways. Forex is an abbreviation of the foreign exchange market. The 24-hour Forex trading session can be broken down into 3 manageable trading periods. Traders often focus on one of the 3 trading periods, rather than attempting to trade the markets 24 hours a day. Peak activity periods are the Asian, European, and North American sessions, which are also called Tokyo, London, and New York. Sometimes sessions will overlap, such as a 4-hour period for peak activity in both Europe and North America. Volatility is sometimes elevated when Forex trading sessions overlap. When trading currencies, a market participant must first determine whether high or low volatility will work best with their trading style.